Back in 2023, Sri Lanka was still recovering from one of the toughest economic phases in its recent history. Inflation had squeezed household budgets, taxes kept going up, consumer spending stayed under pressure like it always seemed. For a lot of companies, just making through it seemed the main game. And still, in that same stretch, one company managed to push its revenue up to almost 140 billion rupees, nearly doubled its profit before taxes, kept expanding its operations, and went on investing for the next round of growth. That firm was Ceylon Cold Stores PLC. So, how did it manage that? Welcome to Beyond the Boardroom. So, in today's episode, I'll be critically evaluating the business strategy of Ceylon Cold Stores PLC using its 2023-2024 annual report. Ceylon Cold Stores PLC, founded in 1866, is one of the Sri Lanka's largest consumer companies and operates under the John Keells Group. The company operates under two major sectors. As we all know, the manufacturing sector produces beverages and frozen confectionery products under the Elephant House brand, and the retail sector operates the Keells supermarket chain. During the financial year 2023 and 2024, the company generated a revenue of 139.6 billion rupees and maintained total assets of 73.7 billion rupees and employed over 7,300 employees, and also operated 134 supermarket outlets across the country. These figures highlight not only the scale of the business but also the strategic importance of its nationwide operations. Now, let's have a look at the vision, mission, and strategic direction. The strategic direction of Ceylon Cold Stores starts with a fairly clear purpose, kind of simple when you look at it. As noted in the annual report, the company's mission is to deliver pleasure and nutrition across people's lives with exciting superior products whenever and wherever consumers desire to eat and drink. Now, to make that mission work, the company leans on five strategic priorities that shows up again and again. As you can see there, it's sustainable growth, fulfilling the customer promise, empowered teams, managing the value chain, and also becoming a sustainable and a responsible organization. What matters from a strategic management view is that these priorities are tied to straight to how resources are assigned, also the day-to-day operational choices and the performance indicators used across the organization. So basically, it shows that the vision and the execution line up not just in theory but also in practice. So, to look at it, PESTLE analysis, we can kind of spot the big outside forces that are impacting the company. Politically and legally, the company had to deal with higher VAT, sugar taxes, and also excise duties on beverages. Economically, inflation, shifts in the exchange rate, and low disposable income have changed the way people buy things. Socially, the habit of eating more health consciously keeps reshaping demand like it's not stopping. And also technologically, digital transformation, most importantly, along with advanced analytics, is turning into a critical competitive level right now. On the environmental side, so the pressures are higher too, and stakeholders expect more sustainability and better waste handling as a norm. So even with all that, Sri Lanka's macroeconomic stabilization during 2023 helped steady consumer confidence a bit and opened up chances to grow. So basically, the company's strategy had to balance cost control, ongoing innovation, and quick market responsiveness at once. At a few strategic strengths like the Elephant House brand, really wide distribution networks, pretty strong manufacturing capabilities, and also backing from John Keells Holdings. On the weak side, it seems there is a dependence on imported raw materials and exposure to seasonal demand vibes, those ups and downs. As for opportunities, it's mostly about international expansion, digital commerce, and a growing appetite for healthier product options. Threats, meanwhile, include taxation, competition, inflation, and the fact that consumer preferences keep shifting. So, if we apply the VRIO framework, you get a clearer picture of how, clear of the competitive advantage, not just surface level. The Elephant House brand stays valuable because it helps create consumer trust plus loyalty, and that kind of thing compounds over time. It is also rare since very few Sri Lankan brands have a similar heritage. It becomes hard to imitate too because the brand equity is basically built over decades. So, copying is not really straightforward. Then the organization itself is lined up to exploit this advantage through marketing, distribution, and ongoing innovation. Also, the company's cold chain logistics network plus the national distribution infrastructure really show up strategic assets once competitors can't just recreate without a lot of effort. Together, these capabilities support sustainable competitive advantage, and that's why the company still shows up as a market leader. To look at the competitiveness of Ceylon Cold Stores PLC, let's take Potter's five forces framework. This framework kind of helps to judge how competitive an industry is. The threat of new entrants looks low since you need a lot of investment, solid distribution infrastructure, and brand development. Not a quick thing. Buyer power stays moderate too, mainly because shoppers still have competing brands to choose from, and that keeps leverage in check. Supply power in moderate because some key ingredients and packaging materials rely on a small set of suppliers, so there is not infinite switching, I would say. Also, the trade of substitutes keeps growing as consumers move toward healthier alternatives and more refined habits. Overall, industry rivalry it stays intense, especially with multinational beverages brands being pushed in, plus loyal MCG companies that never really back down. Still, even with all these pressures, Ceylon Cold Stores manages to protect its market position more through differentiation rather than cost leadership. The company mostly follows Potter's differentiation strategy, kind of. Instead of only going head to head prices, CCS sort of wins by leaning into innovation, better product quality, and brand recognition, and the whole customer experience. You can see this in the premium MRH range, right? Manage about 51% volume growth over the year. On top of that, the firm laying on advanced analytics to make distribution more efficient, also to boost customer engagement. All of these efforts in practice they help keep customers loyal to its brand and at the same time back long-term profitability. Now let's have a look at its leadership, brand equity, and strategic direction. So to better understand how the organization itself weaves its strategy and competitive advantage, let's hear from Mr. Daminda Gamlath, President of Consumer Food Sector of John Keells Holdings. Let's move to the video.
I'm Daminda Gamlath, President of the Consumer Food Sector of John Keells Group. Being recognized as a super brand is truly a proud milestone for all of us at Elephant House Ice Cream. For a brand that has been part of Sri Lanka's households for generations, this recognition really reflects the trust and confidence of consumers have placed in us over the years. Trust doesn't happen overnight. It builds through consistency, reliability, and a strong commitment to quality. Elephant House Ice Cream has always been about bringing families together and creating memorable moments. As part of Ceylon Cold Stores and the John Keells Consumer Food Sector, we are guided by strong governance.
Now, let's have a look at the strategic actions and growth initiatives. So, when we are to speak about this particular area, so strategy becomes meaningful only when it finally turns into action, not just ideas. So there is one major push, the acquisition of a PET bottling and can manufacturing plant in Idpana, showing around 750 billion rupee investment. The company also jumped into a partnership with Reliance Consumer Products in India, which helped the Elephant House brand to expose, to expand overseas, I would say. And besides that, there were other moves like launching, brands like Ice Pops and widening Kale's outlets and speeding up the rollout of advanced analytics. All of these actions signal proactive strategic execution instead of sitting back and doing only a reactive sort of work culture that pushes adaptability and also continuous refinement. All that organizational vibe helps the company carry out its strategy in a more solid way, I would say, pretty consistently. Let's step into the most important part of today's episode, which is financial performance and strategic evaluation. Ultimately, the success of any strategy, must be evaluated through performance outcomes. So the financial results suggest that Ceylon Cold Stores executed its strategy effectively during 2023 and 2024. So revenue increased from 126.1 billion rupees to 139.6 billion rupees, representing growth of 11%. Most importantly, gross profit increased by 37%, significantly faster than revenue growth. This actually indicates improved operational efficiency and stronger margin management. So operating profit increased by 32%, demonstrating that the strategic investment and productivity initiatives translated into strong operating performance, I would say. Then most impressive figure is profit before tax, which increased by 120% from 2.2 billion rupees to 4.9 billion rupees. This suggests that the company's strategic initiatives, cost controls, and recovery in consumer demand generated substantial financial returns. Profit after tax also increased by 36% to 3.4 billion rupees. Earnings per share rose from 2.64 rupees to 3.61 rupees, directly benefiting the shareholders. Debt reduced by 25%, while return on capital employed improved from 12.5% to 16.2%. This indicates a more efficient utilization of invested capital. Perhaps most importantly, market capitalization increased by 35 or more percent to over like 51 billion rupees, um, and also reflecting investor confidence in the company's future prospects. So altogether, these results provide strong evidence that the company's strategy is creating value for shareholders and all the stakeholders out there. So, what can we conclude from today's episode? From today's analysis. The success of Ceylon Cold Stores is not the result of a single product, a single brand, or a single business decision. Instead, it reflects the combined effect of strong brand equity, disciplined strategic leadership, continuous innovation, investment in people, and the ability to adapt to the changing market conditions. Despite operating in a challenging economic environment, the company strengthened its financial performance, expanded strategic investments, and maintained its market leadership. Ultimately, Ceylon Cold Stores demonstrates an important principle of strategic management. Sustainable competitive advantage is achieved not by reacting to change, but by anticipating it and responding with purpose. Thank you for listening and see you with our next episode.